Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Monday, June 10th, 2024. Today's episode is primarily about basically stocks are going up and rates are going up. Later this week, Wednesday, we have CPI, and Thursday we have PPI, both of which will help us guide the markets as far as how we see inflation, where it's at, where we're going from here. We'll start with the S&P 500. Nothing too dramatic today. However, today was an important day for myself, only because the jobs report came out on Friday, and I was waiting to see how markets would sort of digest that over the weekend and what would happen on Monday. And it seems like, it's not excessively bullish. I mean, this isn't officially an engulfing candle of the last 2 days, so it is bullish, but not excessively bullish. I'm getting more of a feeling of melting up, and this is your typical summer season in the stock market. Things tend to get more boring, and that's sort of what I'm seeing here. But there's no denying the chart. The chart is saying the S&P 500 is showing more strength than it's showing weakness for today. Moving on to HYT, high yield corporate bonds, the risky, if this is collapsing, that's like a very clear warning that the stock market is sure to lose its legs. Flat, still coiling here. It's funny. I was talking for a long time about how the jobs report on Friday could really send things flying one way or another. And here we have HYT sitting on its handle. It's like nothing even ever happened. In fact, if anything, it looks like after today's movement, we're coiling up even tighter here. And so this could represent a big battle between bears and bulls as to which way it should go. And then once it breaks out, it should break out pretty strongly. Maybe that will happen off of the CPI and PPI data coming out later this week. Another notable chart for today is DXY, the value of the dollar. Funny enough, broke out higher while the S&P 500 also broke out higher. Normally, stocks want to go up when the dollar is losing value, and stocks go down when the dollar is gaining value, but that's not happening here. And so I find that very interesting, and especially notable because this is like a breakout pattern. This line right here, if I drag it down to here, it's a pretty clear parallel line that touches this previous high candle top here, and we can count it. Maybe even count touching this one. It's a clear, strong breakout, and making the more likely scenario of DXY to head higher and higher from here, at least off of today's action. The fear and greed index. It's interesting. Friday's information, the unemployment rate was higher than expected, and to my eye, looks like it's curving up and is heading straight into a recession or a depression. Until it goes the other way, it's going that direction. There's no denying that. But we had the jobs number was so high that number didn't really matter, apparently. So at the end of the day, we're back to neutral. We're back to just sitting on our hands, no real reaction seemingly from the market any which way about it. Again, I think part of this is the boringness of the summer, which it stinks because a lot of people have a little more time at least in the summer to be looking at markets, and this is when things just get the most boring, but it is what it is. I wanted to check the Fed funds futures for the September meeting. Notably, on Friday, we flipped from having basically a guaranteed cut, well, 49, a higher chance of a cut than no cut, to now having a higher chance of no cut versus a chance of a cut. And so, and then from Friday's data to today's data remained exactly flat. So it's like the market, like, I swear it's just asleep. It's like it didn't wake up today. That's what I'm getting. Moving on to the 10-year note Treasury yield. I've been talking about this and saying how we kissed this a trend line. I'm just not great at drawing trend lines. I think that's part of the problem. But, unfortunately for me, as if you've been following my show, I'm highly exposed to treasury bonds right now, and if rates go down, I will benefit handsomely from them. And so they went up a little more today, going against my current positioning. And, possibly back in this channel again. I wish I was better. I wish I was as good at figuring out these trend lines as Gareth Soloway, but certainly there's a lot of ways to adjust and look at these lines. If I just simply take this bottom here and adjust it to the top of today's candle, or at least the close of today's candle, you can see that, maybe this is a top here. I don't know. I don't really know what's going on here. Again, the overall sense that I'm getting from markets right now is that they're all asleep. There's nothing dramatic. I'd take what's going on in markets today, and maybe all the way up until CPI and PPI this week, with a huge grain of salt, just because nothing's really happening here. I don't know how else to put it. It's a little easier to read the trend lines in TLT, Treasury Bond Fund. This line hits pretty precisely 1, 2, 3, 4, 5 times, breaking through it, and actually today, for the value of this fund, touching it. And so I am very curious if this will act as a support level here, and if this is going to turn into a higher high, higher lows, higher high kind of a pattern or not. But I guess we'll see. And then also with this potential head and shoulders here, is this the retest, which then gets us back, to play out this head and shoulders here, which should send us up to, well, it looks a bit like about $97 now. Coincidentally, hitting this other longer term trend line that I had drawn. I don't know where that came from. Ignore that other line. Overall, looking through all of my charts today, there's just not much going on except for the dollar. The dollar breaking out seems to be sort of eventful, and then HYT continuing to coil up smaller and smaller. Those are the most interesting things that I see going on today in charts. And that's all I have for today's show. I hope you enjoyed. Thank you for watching. Robschild.